Hey YouTube, what is going on? Welcome back. This is Zach with Achilles Financial, and that's right, we are back again with Nvidia. This is a stock that I talk about literally all the time. How often do I talk about it, you ask? Well, if we just look at the ticker in my video, then we have not one, not two, but 3, 4, 5, 6 times where I'm talking about Nvidia. And I'm sure that I mention it in a number of my other stocks. One of the reasons why I love this stock is because they just don't stop going. So as you can see, I'm on the 1-day chart right here, and they're up 7% on the day. Now, why is this move happening? Well, there are two things that happened today. One, we had a series of analysts increase their price target, so they are not only just bullish, but very bullish, as well as this is just a natural earnings run-up that we like to look at right before earnings this coming Thursday. However, Zach, if you talk about Nvidia so much, why should we care? Why do we want another run-up? Well, I'm so glad you asked. This is how they moved over the past week. Again, most of that run-up came in today. The month, look at this. This is an $85 move over the past month. But if we take it back 3 months to the end, or rather to near the bottom at that 41%, we're still up $144 a share. But if you look at it on the year, I just want to highlight just the massive growth. This is 201% return on investment. And I don't think that we're done yet. The reason that I'm highlighting this on Robinhood is because I do think that this is something that is familiar for many of you. The other reason is because just look how beautiful this chart is over a year. Again, this is something that has been awesome. The stock is in such a better position than their last high point that we saw during the Bitcoin craze in 2018. But look how nice this chart looks. Again, I have a running joke with one of my friends. Every time we talk about Nvidia, it's a new all-time high. And this is just a stock that I think is going to continue pumping, continue going up. And I just want to showcase some of that as we go into earnings, as well as I'm going to walk through some of my moves that I made this morning. Unfortunately, Nvidia was not one of them. I mentioned on my watch list last night, or my weekly roundup, that I wanted to play on Nvidia. I looked at it this morning, and the move that I really wanted to do was like $1,000. And I just don't normally play options that big. I like to stay really under $100 on most of the options plays that I'm making. So just want to highlight that. But let's dive into the plays that I made today before we get into Nvidia. So step one is I did play the Warren Buffett gold move that I talked about in yesterday's video. Again, they had another awesome day, up nearly 12%. You can see a lot of that movement right here. What I ended up doing is a call spread, and I'm just going to show you what that looks like right here. As you can see, I'm up just a little bit on it right now. This was a move that I believe the cost for me was... Okay, I've changed my view so you can see what the cost was. You can see that here that this was a move that cost me $17 for the total. This is a call spread or a debit spread. This is just something short. Again, I think that it's going to continue to rise over the course of this week. However, I only had like $150 in this account for options trading. So that's what I wanted to make the move with. That's why I couldn't play Nvidia today, is because again, I have been purchasing up shares in preparation for the dividend payments, in particular FTAI. I did that video last week. But as you can see right here, I'm already up $2.50, which is a good 15 or nearly 15% return. As you can see, I probably could have just done the call option and been okay, but we should be fine. The reason for this is I do think, as you can see, kind of the max profit point is going to be when that price hits 30.50 right here. So if we can have that continue by the end of this week, anywhere that it ends greater than $30.50, we're going to hit that max profit of $33, which is a nearly 200% return on investment. So I am very much okay with that. However, we have to see what the market does for the remainder of this week. Last week, gold was negative on the week, or it may have actually finished positive. So this would need to extend another big week for gold prices as a whole. I do want to reiterate that Barrick Gold is not a gold stock in terms of it is not just holding the precious metal, but rather it is a mining company. So be aware of that. But this is one of the plays I made today. And if we close out this week, it will be a 200% return on investment, albeit it'll only leave me with final liquidity from this play of $50 total. In the same vein as gold, I did actually make a silver, and this is just the Silver Trust iShares ETF, which is essentially a review over silver stocks as a whole. And that play is being made here as well. Again, this is just the call option. I did put $30 on this one, and I am up a whopping 50 cents on this. This was a fairly big move for them to go to $27. However, silver's done it before. And if we notice on the chart right here, they're actually kind of lagging a bit from what we saw for gold. Let me just show you the 2-week chart for this. Again, I think they can reclaim this all-time high where they were above $27. I'd like to see a big momentum play overnight sometime this week. And if that occurs, then what I'll do is I should be able to flip this for a quick profit. But as you can see, I think the all-time high for this is, or at least the one that I'm looking at right here, is $27.88. If we got anywhere above $27, anything above $27 is what I'll be able to sell it for. But really what we're looking for is I'd like to see it beat that high of $27.88. But anything over $27.30 will be a profit. And again, we can kind of look at that here, where you can see how that works out. Again, if it gets to $27.30, it's basically break even. However, what we're really looking at is some of this opportunity here. And you can see if it makes that move sooner rather than later, I've got room for potential big profits. So that is the silver trade. And lastly, we've got Microsoft. Microsoft is another tech trade that I made today. Again, we've played Microsoft a number of times, including the TikTok run up here. However, this was the opportunity for me to get back in at a lower level when a lot of tech stocks are continuing to do well. And you can see that reflected here. Again, the stock just continues to perform very well. I'd like to see this get a lot higher. Again, we played it back here when it was going up, and I thought it would hit 220 at that point in time. I'd like to see a big move, again, to get to 220. This is Microsoft, which tends not to really move that much. But if we see any TikTok news, I think there's an opportunity here. My entry cost was only $29, so it wasn't that bad. As you can see, I am down pretty heavily on this though, but I'm not as worried about this because this is a momentum trade, and for them to hit all-time highs, because I think if they break 215 or 217, then we'll just continue to see them go higher. If that occurs, then this could be a big move for them, and it could be a big win for me. Again, really what I'm looking at here is all I really need is like a 2% move in a single day. And I think that'll be back in the green for this, because a 2% move for Microsoft, we'll see it at 215, and I think that that's plenty of momentum. And if it doesn't, then we miss out on it. So that is all for the plays that I've been making. Now let's hop into an earnings play that we have coming up this week. And we are back, ladies and gentlemen, to Nvidia. Again, I love when I watch Nvidia go higher and higher, even though I personally, despite all the fact that I've talked about it, do not own any Nvidia shares. This is a stock that I talk about consistently with, though, with friends and family, because they do own shares. And I have played the options on this probably, I don't know, 10 times at this point in time. I wish I had played the one this morning. I was looking at $4.90 call prices, and unfortunately they were just so expensive, and as you can see by today's closing price, for good reason. So this is one that I do have a trade for you that I want to look at, but right now let's just review. As you can see, some of the bullishness came from the fact that this is a big move, and I just want to go ahead and highlight that whenever I see stuff like this, I just think it's total BS. And the reason for that is because stock pickers get benefits from saying when they think that a stock is going to be moved, more or less, in terms of if the stock goes up after they make an announcement, then they benefit from that. And when Nvidia is trading at 460 to actually, I think it was 470, and Wells Fargo comes out and says that they're going to change the price target to higher than what it's already at, it's basically just a free win for them. So this is just a ton of false positives, I would say. They shouldn't really get any credit for this. I do want to highlight, just as we're looking at this, I've turned on the high-low estimates for these stocks. Look how much more profitable they are becoming over time. Again, you can see these ranges are pretty big, and so there's a pretty wide margin of error, whereas they didn't used to have that. A lot of this uncertainty, I think, is coming from their acquisition of Mellanox earlier this year, where they highlighted, hey, we anticipate this being profitable by the end of this year. So you can see that we've got pretty big earnings estimate expectations right here of essentially they're expecting 197, but that's still a lot better than our first period. The next piece that I want to really look at is just some of the fundamentals associated with this, in particular just the price performance. Look how high up the stock is moving, and they're continuing to perform well. And you can see just some of the movements here where annual growth, they're growing, and this is not a small company. This is a multi-billion-dollar company, and we're growing revenue at 20% every year. The dividend growth I'm not as impressed with, but once I show you some of this other information, you'll see why that's not necessarily a crazy change. From a balance sheet investment perspective, they have a lot of cash on hand, and that is incredibly important because Nvidia is starting to taper off from that growth company mindset, and what they're doing is they're buying more companies to supplement the areas where they don't have a lot of strengths. So that's what we're looking at here, is are they going to go for another investment by the end of this year? ARM is another chip maker in the UK that has been discussed as being potential. Again, everything is going up. We like that from a company perspective, including total revenue. Again, 2020 is not done yet. So one other thing that I want to look at is when we're looking at these valuations, the stock is moving a lot. And one of the things that I want to highlight is look how high up we are when we are of the Nvidia versus the industry. So I think that they are a little over leveraged, but I also want to highlight that this is just some of the financial strength, but look at the profitability. So when we're looking at these valuations, they are incredibly overvalued when you look at traditional fundamental metrics. I mean, high on the PEG ratio, which this is incredibly important for them, particularly how much farther ahead of the industry. This essentially means that they are expected to grow and grow a lot. But you can see that this is pretty common up here when we're looking at the pricing versus what they're actually bringing in the tech sector. So they're doing pretty well there. The reason that I highlight they're doing so much better is because look at these profits. Again, software companies and chip making companies tend to have high profits, but they are really high, and that's to be expected. But they're just dominating their industry. I mean, you're looking at gross profit margin of nearly 65%. That means every dollar that comes in, 65% of that is not related to cost of goods sold. That's huge for them, and I'm really impressed by that number. So I'm interested in watching them grow. The dividend is not going to catch up. I don't think it's going to catch up this year, so I am watching that. I think that they'll be fine without paying a dividend because they are a big growth stock. I say not paying a dividend. They do have a dividend. It's just not a big one. As you can see, again, it's a yield of 0.14. I would not be surprised if they raise that dividend now. However, I think they still may be conserving cash in case of an additional acquisition. So going to be watching that. I'm just going to highlight the growth rates right here. You can see these metrics. Again, I don't find anything super meaningful from these numbers other than revenue growth, but we are focused on this profitability. Again, that's what's growing. That's what's doing really well. So I'm going to be watching this tomorrow and seeing, or rather on Thursday, to see if there is a move available. But let's take a look at where I think we can make a move without getting a crazy punch from the valuations or from the call options. So I pulled up a trade where I think that we can make some money here. Again, this is if you have $250 in collateral. Because call options are so expensive, what I'm looking to do is sell premium. So this is a put premium, As you can see right now, this will provide me for $250. By the end of this week, I can get $42 back. So this is betting against the or saying this is a bullish trend. I think the stock will continue to do well. The only way I lose is if the stock drops below $250. So if you're watching this and you have more than $250 of collateral, and that $250 is just coming from the difference between $450 and $447, it's very easy to extend this. So if you want to tie up $1,000 to make this trade right here by the end of the week, someone will pay you $105 right here, or they will pay you $105 off your $1,000 investment. This is a 10.5% return. That is just you saying, hey, this is a credit spread that I'm willing to sell. Your worst case loss is the worst case loss is $895. And that number sounds huge, but I do want to highlight, to get there, the stock has to drop nearly 10%, which I guess it can do. I just don't have that expectation by the end of the week. I think that this is a great trade. If I had $2,000, I would make this trade right here, which is the 430, where again, someone is going to be able to pay you $161 to be making this trade. This is by the end of the week. One of the ways that I think is even a better advantage, because I am bullish on the stock, is to go to the end of next week, where someone's going to pay you $310, which is essentially a 15% return on investment. So these are just some of the trade ideas. The reason why I'm looking at these versus call options is because look at the expectation on calls for just by the end of the week. So this is for the stock to move another 5-10%. Let's just take a look. Again, we're pricing in at $1,560. That's $1,560. It's just very expensive, and that the only way that you profit from that is the stock has to move all the way up to 426. So that's a huge move. So that's what I'm watching. These are some of the different options that you have. If you like this video, if you find this content helpful, please drop a like below. Thank you for your time today. I appreciate all of you. Talk to you later.